Hello, good evening, traders.
Good evening.
Hey, Mr. Steven, how are you doing?
I'm okay. How are you, sir?
Doing great. How's the week?
Good evening, sir.
Yeah, good evening, trader. How's the week been?
Very cool. My first time on your Zoom, and I'm glad to be here. Right?
You're very welcome. You're very welcome. Okay, while we wait for others, let me hear from you guys. How's trade been this week for you guys? How's the trade been? Did anybody take trades this week?
Yeah, well, I took trades for somebody like a novice like me. The week has been good. I lost some, I won some, and I can state that my wins were far, far, far greater than my losses. My daily target is $50 a day with a capital of $200. So the week entirely, apart from today that I achieved $35, thanks to you. And the VIX 100 we took, it actually pushed me up today. Apart from today, the rest of the days I've actually hit my targets, and I'm grateful. Yeah.
All right, that's good news. That's good news. Mr. Basio, you're welcome. Lawa, you're welcome. Prosper, you're welcome. Wale, you're welcome. Mr. Camillus, you're welcome. We've got quite a lot of people online tonight. You're all welcome. You're all welcome. All right. Tonight, we'll be talking on something very important. I told you guys, you need to learn how to take trades confidently. All right. I said I was going to expose to you guys a little secret that I use to take my trades confidently. Don't confuse me first. All right. So let me see if I can just go straight to my charts. All right. If you can see my screen, just use the chat box and comment, I can see your screen. If you can see my screen, traders, just comment, I can see your screen. All right, good, 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 good. This training webinar tonight is gonna be a quick one, all right? I'm not gonna waste much time. So I gave signals today, and I noticed quite a lot of people came to my DM and were kind of like asking, "Hey Tim, I couldn't take the entry when you gave it. I was scared, this and that." And I was like, whoa, it's normal, right? When you are new to the business, when you're new to the industry, it's normal to be afraid to take trades because you don't want to blow your account. You don't want to make losses. You understand? So it's a normal phenomenon when you fear to take trades. But this is one thing I always tell my students. If you want to be a profitable trader, you must learn to approach the markets like a lion. All right. You don't come to the market like a sheep. Okay. You don't come to the market in fear. You have to approach the market like a lion. Or better still, I say approach the market like you are the owner of the market. Okay. What do I mean? I'm trying to insinuate that when you want to take a trade in the market, okay, you act like you own the market. Take the trade confidently, like you know, or like you're sure that it's going to go your way, even though you know very well that this is Forex and anything can happen. But learn to approach the market like as if you know and you're sure that it's going to go your way. All right. That's a little secret. And how do you do things like this? When you want to take a trade, you need to let go the fear. You need to overcome the fear. Now, what is this you're fearing? You're actually scared because you don't want to lose what you have in your account. Maybe you have a $10 account, or you have a $20 account, or 50, or how much, whatever it is. All right. You're in fear because you don't want to lose it. All right. You don't want to lose it. Now, this is one word that you always hear in the Forex markets. Some people tell you, learn to risk what you can afford to lose. All right. Learn to risk what you can afford to what? To lose. And a question comes up sometimes. A lot of people will say, but how can you tell me to lose what risk what I can afford to lose? Who can afford to lose any amount of money? Who wants to lose any amount of money? Nobody wants to lose money. You understand? But it's a normal thing. Okay. In this market, the times when you're going to be in loss and the times when you're going to win is a normal thing. So you have to have that at the back of your mind, that what I'm doing is a risky business. Is either I win or I lose. All right. You have to have that at the back of your mind first. You must always understand the fact that this is a 50-50 thing. You win or you lose is a normal thing. But one thing that makes you a trader, okay, is you being more in profit than in losses. Okay. If you be more in profit than in losses, then you are a trader. But if you be more in losses than in profit, right? You are a gambler. You're just gambling. You're just trying to see if it can go your way. No, you don't do that in the Forex market. Don't try to see if it can go your way. No, you have to trade the market fearlessly on believing. Always have the belief that it has to go your way. That's what gives you the confidence. It has to go my way. I don't care whatever it is. It has to go my way. You understand? Have that. Just give yourself that sudden boldness, like you are sure that nothing can stop it from going your way. That's you giving yourself the confidence. And then you always want to make sure that you don't over leverage. Okay, don't over leverage. You know the kind of account you have, the amount you have, maybe a $10, $20, $50, 100, 500, or whatever amount you have in your account. You always want to make sure that you don't over leverage. Okay. If I remember back then in my early days in trading, when I used to approach the market with a $10 account, I would say to myself, okay, I can raise this $10 to $100 today. I'm gonna do that. I'm gonna do that. And when I want to take a trade, I go on higher lot sizes with a $10 account. Can you imagine how stupid that can be? You understand? You are approaching the market with a $10 account and you over leveraging just because you want to see if it goes your way. Whoa, I'm gonna make it big. No, that's not how it works in the Forex market, right? Sometimes the Forex market works like as if it acts with your mind. It acts against your mind, not with your mind. It acts against your mind. When you say to yourself, I'm going to win it, all right, it begins to go against you when you are over leveraging. Now, this is what you need to understand. In the Forex market, all right, there are people who move the markets. They are movers and shakers of the markets. They are manipulators of the markets. So you need to understand there's something we call uh I've forgotten the name, how what they call that, something reading on the chart. So that what that thing does is when a trader takes a trade, all right, when you take a trade, you just get a notice. I believe a lot of you notice something like when you take a trade, you just notice that the trade begins to go against you suddenly, all right, suddenly. And then the moment you, out of fear, rush out of that trade, you see the trade begins to go according to your bias, all right, according to your direction. Have you ever noticed that? Do you notice that? If you do notice it, just leave a comment. If you do notice it, just leave a comment. Whenever you just enter a trade, you just see a trade that was going bullishly, all right, and then you say, okay, let me buy. The moment you place that buy, you just notice price begins to go against you. And once you leave out of fear, it begins to go your way again. All right. A lot of people say, yes, I see. That's what happens. All right. So sometimes your entry triggers the movement of the chart. All right. But you need to understand that this is Forex and anything can happen. So you need to make sure that you approach the market without fear. Don't be in fear. Now, this is a simple rule that you should always learn to follow. Number one, before you take a trade, make sure that you have analyzed your markets. All right. Don't ever enter an unanalyzed market. Do not ever enter an unanalyzed market. Always make sure you analyze your market, apply your price action. If you're using indicators, always make sure you're following the rules of your indicators. Make sure what needs to be met has been met before you take trades. Okay. And then after analyzing your market, make sure that you are being able to figure out your stop loss level. All right. Do not risk more than 2% of your account as a trader. Don't ever risk more than 2% of your account. You always want to make sure that you figure those things out first before you take an entry in the markets. You want to calculate how much do I have as my balance right now? This how much is 2% worth to this amount I have right now. All right. Once you can be able to figure out how much 2% is worth to your account, you want to then use your normal formula to calculate where your stop loss ought to be. It is always advisable that after analyzing your market, set out your point of view, your point of entry, set it out before price gets to it. All right. What a lot of traders do is they just when they finish the analysis, they just look at the chart and say, okay, I'll take entry anytime soon. All right. And they fail to figure out where they want to take their entries. It's very important as a trader. Always figure out where you want to take your entry before price gets to it. Because the moment you're being able to figure out where you want to take your entry from, you'll be able to make your calculations from that area. All right. For instance, let's say you have made your analysis. Okay, you've made all your analysis, and then you say to yourself that, okay, I want to take this trade whenever price gets to this level. Okay, you say to yourself, I want to take a trade whenever price gets to this level. Then after you've made your analysis and you've figured out your point of entry, then you want to calculate your stop loss with your point of entry. Okay. Now, this is what you need to understand first, that you need to figure out the fact that, okay, sometimes you might say to yourself that you want to take an entry from here, and maybe your anticipation is that you're anticipating price to give you a breakout. All right. You're anticipating price to give you a sudden breakout, a retest, and then make maybe a move push up like this. All right. So you have here in mind as maybe your entry zone. All right. Here as your entry zone, which is the 48.97. And then you get to find out that maybe price, instead of price respecting what you anticipated, price suddenly begins to move even higher and higher and higher. All right. That's what happens sometimes. It does not go exactly the way you anticipate it. Okay. But the fact is, you have your point of entry. Okay. And you have made your calculation. So even if price does not respect your anticipation to give you a proper entry according to the calculation you have made, already since you've made the calculation from here to your minuses or pluses, and you figured out your stop losses, your stop loss level, what you want to do is anywhere you end up taking that entry around here, all right, you just want to do your little subtraction of from the normal entry where you finally entered minus whatever you got as your stop loss level when you made the initial calculation. So that's going to give you a quick stop loss, a quick result, or a quick answer to where your stop loss should be set. Okay. So the whole idea is always make sure that after analyzing your market, you want to point out your entry level. Make your calculation for your stop loss quickly before price gets to that zone. Okay, so don't just be a kind of trader who just want to buy anytime, and then after buying, that's when you want to start doing your calculation to know where to place your stop losses, because you just get to find out that sometime before you finish your calculation, if price was going against you, it must have gone far beyond 2% of your account. Then another thing is sometimes if you are using the MT5, all right, this is the MT5 platform, it's also very easy for you to be able to figure out areas where uh, it's also very easy for you to figure out how much you are losing or winning when you take a trade. Okay, for instance, let me say I take a sell here. I'll just stay on this low lot size. All right, now this is I'm, I'm on a sell right now. Okay, so if you if you want to set a stop loss and you hold it from your entry down, okay, down, you get to see drag to modify profit 1.5 1.53. All right, so which means this is a take profit that I've just set. So if price goes for me, that's going to be what? 1.53 profit. And if I take it up again, up to let's say a certain stop loss and place it here, you see drag to modify profit minus 1.99, but that's your stop loss. So that's trying to tell you that this is how much you're going to lose if it goes against you, and this is how much you're going to win if it goes for you. Okay, so with the MT5 platform on your PC is quite very easy for you to be able to figure out. It's quite easy for you to be able to figure out how much you're going to lose in the entry in the trade you've just taken. All right, so for those who's got a PC who takes trade with their PCs, this is very simple way for you to be able to know how much you're about to win or how much you're about to lose. So once you've taken your entry and you want to set your stop loss, and maybe you have in mind that, okay, I want to risk just $2. So what you want to do is you drag your stop loss, and as you drag it, you get a seed here. While you're dragging, you get to see here, it says, how much do you see there? Minus $2.05, right? You want to take it down, minus $1.93. All right, so with this, you can be able to calculate, okay, so that is minus 2.05 what? Dollars. So if it goes against me, that's how much I'm going to lose. All right, so that's a very simple way to use your MT5 to figure out how much you're going to win or lose while you are in your trade. Okay, so let me get that trade off right now because I wasn't even expecting to take a trade. Common traders. Okay, so now what is the special secret that I use to take trades fearlessly? All right, it's not actually a secret, it's just kind of like it's a normal thing, but quite a lot of people don't know that. Quite a lot of people don't know that. This is what a lot of traders do. I used to do it too back then until I figured it out. When you take a trade, all right, when traders do take a trade, what they do is they begin to look at their charts. They begin to look at their chart, even to the extent that you see someone will zoom it up like this, they zoom it like this, looking at the chart consistently, looking at the charts, and the chart begins to play with their emotions. You get to find out that that's exact time you took an entry here. All right, that's when you notice price will begin to play around your entry, and you be like, oh Jesus, can this thing just go my way? Oh man, you know. And when it begins to go your way, you be like, yeah, it's going. And when it begins to go against you, be like, oh shit, it's going against me. No, traders, if you want to become fearless in this market, this is the secret. When you analyze your markets, figure out your stop loss, take your entry. All right. Once you've taken your entry and set your stop loss, leave the charts. That's one way you can kill the fear. Leave the charts. Leave the chart with a positive mind. And that positive mind is, I believe that when I come back here, is gonna be that this price is going for me. All right. Leave the chat doesn't mean just take your trade and switch off your phone or no. stay close to your chart. But what I mean is stop looking at the entry. Stop looking at what price is doing around your entry. All right. You can leave it and begin and go straight to another market. Maybe you take your time and be analyzing another market once in a while, like 2 or 3 minutes or 5 minutes, you come and check the price where the price is currently. Is it against you or is it for you? Even if it's for you, congrats. If it's against you, don't panic. All right. As long as you've set your stop loss, you already have in mind how much you are willing to lose. $2, $3, $5, depending on your account, right? So you've set your stop loss and you know that, okay, if it goes against me, this is how much I'm going to lose. And I have it in mind already. I am willing to lose it. All right. You have that in mind already. So there's no need to be afraid of what you're going to lose. But all you want to focus right now is just get your mind off the charts. All right. Just get your mind off the entry that you have taken. Focus on another market, be analyzing another market, right? Be playing around with whatever you want to play around with. Sometimes when I feel like I don't want to analyze in the market, what I do is I just get off the chart, set my stop loss, get off the chart, and then take my phone, playing games on my phone, or chatting with friends once in a while. Just go back and look, is it going with me for me or against me? Whatever it is, traders. So the whole idea is stop looking at what price is doing with your entry. Just take your entry, make sure you set your stop loss. The big mistake a lot of traders do is to failure to set stop loss. When you don't set stop loss, trader, you are risking your account. Okay, you're risking your account because if it goes against you beyond your expectation, you're gonna lose beyond what you expected to lose, and that's going to deal with you emotionally. It's going to hit you hard. It's going to make you feel like Forex is a scam. It's not a scam. Forex is real. It's a good business. A lot of people are using it to survive. All right, but the thing is, you have to follow the Forex market with wisdom. Understand it. Okay, understand it. That's just the thing, traders. So you just want to make sure that you apply your stop loss at every time. And another thing you should stop doing, because a lot of traders do this, I used to do it too when I started trading newly, all right, is what we call mind stop loss. I always beat on this word every single time. Stop, do not use mind stop loss to take your trades. When I say mind stop loss, what do I mean? A lot of traders will take an entry and then they fail to put they refuse to put stop loss, maybe being lazy to calculate where to put your stop loss or so. They just feel like, man, okay, there's no need putting stop loss. I'll stop it when it goes against me like this. And then they suddenly begin to see price going against them. And then their mind tells them, okay, don't worry, don't get off the trade, don't worry, it's going to reverse right now. And then you find out that it doesn't reverse. It still goes against you deeper and deeper. And you'll be like, okay, don't worry. I believe it's going to go for me once it gets here now. And the more the more you're using your mind to set stop losses, the more price is still going deeper and deeper against you. And the more your mind is telling you, don't worry, it's going to go for you. Just wait, just watch. And it keeps going deeper. Before you know it, you have blown off an account. All right. So do not set stop losses with your mind. Set it manually there on the charts. That is why they put it for you. All right. So don't use your mind, because when you use your mind, you are hitting your mind so hard, because Forex alone deals with man's emotion. How much more you're now putting stop loss on your mind again. Come on, you're just kind of like you're trying to give yourself a heart attack, especially a lot of traders who borrow money from people to take trades. If you're that kind of a trader, stop using mind stop loss, because number one, at your mind is thinking of, oh, I borrowed money from this nigga, or I borrowed money from here, or I took loan from here. Your mind is already panting on the borrow, and then you are still using that same mind to set stop loss in a forex market that deals with the mind. Come on, you are heartless to your mind, traders. So you don't want to do that to yourself, because that's going to give you a very bad emotion at the end of the day. So do not set mind stop losses when you take your trades, okay? Always make sure you analyze your market properly, okay? Analyze your market properly. Know your point of entry. Set your stop loss once you take your entry. and allow the price to do what it wants to do. Another thing you must always understand is learn to take entries from the right points. All right. Don't take entries from anywhere in the charts. Take entries from the right places. Okay. I don't see why a trader would see price at resistance. All right. How would you see price at a resistance zone and you are buying? That's nonsense. All right. How would you see price on a support zone and you are selling? So you must always learn to figure out the right areas to take an entry to prevent you from being in losses. I told you earlier, what makes a trader is not when you keep winning and winning and winning. All right. What makes a trader is when you see yourself lose little and you win more. Okay. You lose little, you win more. Don't if you end up losing more and winning little, it means you're still gambling. It means you need to learn more. You need to go and practice more with your demo accounts. If you know you're not confident enough to take trades, you keep using your demo account. Stop risking your hard-earned money, traders. Stop risking your head and money in trading the forex market until you have practiced enough. One thing that affects traders is a lot of traders just want to become rich overnight in forex because they've seen so many videos, they've seen so many screenshots of how people make $10,000 a day. Look, you need to understand that the people who made $10,000 a day, $5,000 a day, they never started that same day. They've started quite a long time, and if you ask them, they're gonna tell you, look, I've blown accounts so many times. All right, they've taken they've taken the steps that needs to be taken. And and you also need to understand that some of them, they start their journey with a huge account, and that's why you see them take entries with high lot sizes and win big. You need to understand those things, right? So do not come into the market with a get rich quick business, or a get rich quick mindset. You're going to lose it all, right? The forex market is not a get rich quick business. It's a business for people who use their wisdom and understanding to follow the markets. Okay, so you need to understand that. I I get a lot of traders who come to my DM every single day. Hey Tim, if I join your academy, how much can I be making a day? If I join your VIP, how much can I be making a week? I don't like this kind of questions. What I do is when I see those kind of questions, I just snub them straight, because you have to let go of that mindset. You have to come into the market understanding the fact that this is a risky business. If I don't put myself well, if I don't comport myself well, I might lose it all. You understand, traders? So you have to understand that fact. So when you were coming into the forex market, always understand that this is a risky thing, and therefore I have to discipline myself. Discipline is the key to success in forex here. You have to be disciplined. You must let go of greed. A lot of traders are greedy. They've made profits, they want to make more. A lot of traders are greedy, and that's why they blow off what they've made. So you must let go of greed. Okay. So the whole thing that I decided to expose to you guys tonight is how to take your trades confidently and not let it affect your emotion. Find out your entry zone after analyzing your markets. Take your entry, set your stop loss, and leave that chart. Stop looking at it. Sometimes the way you look at it is your mind begins to make it go against you. Yes, because it happens. It's quite unfortunate, but it happens, you know. Because while you're looking at it, your mind is kind of like, oh, go for me, go for me, go for me. And when it's going against you, be like, oh shit, it's going. And the more you're crying, the more you're crying, or the more your heart is crying, the more the chat is gonna keep laughing at you and going against you, dealing with your emotions. So don't let it deal with your emotion. All right, traders. All you want to do is take your entry, leave that chart. Don't over leverage. Some people want to open 10 positions in a single trade. It's not right. All right. It's not right. Even if you want to open 10 positions, all right, you open it with wisdom. There are areas of entry. You don't just take all your entries in one single position. And if it goes against you, it's going against all your entries at a time. That's not how it works. If you want to take an entry, once you've taken your first entry, if you're looking for, you want to take in another entry, what you should do is to look for the nearest area where you feel price is going to struggle to cross over. Once you find out that price have ended up crossing over that level, you take another entry. All right. For instance, if you took an entry here, right, and price goes for you, and struggles around here, after all the struggle, price finally breaks out, you can take another entry. All right, you take another entry. So after the next entry, you know that since price struggled to break out of here, once, as long as it has crossed over, giving you kind of a retest, all right, you should know that it's really going to be tough for markets to really break out of here, going back down again. So if you take your entry from here, you set your stop loss, you want to lose this amount of money. All right, you know how much you're willing to lose. You set your stop loss and allow the price do what it wants to do. All right, stop acting like you're the one who's gonna move the market. You can't manipulate the market, no matter how spiritual you are. All right, so stop looking at the chart when you've taken your entry. Get out of the chart and look for another market and analyze, or play your game. Go watch movie. As long as you set your stop loss, if it goes for you, better. All right, but don't forget to always come back to look at your chart so that you don't end up finding out that price went deeply for you, and only for you to come back and find out that price has finally gone back against you. It happens. It happens. So maybe the best thing to do sometimes is, after you set your stop loss, taking your entry, set your stop loss, make sure you set a take profits. Okay. So that if price ended up going for you and hit you take profit, let it close automatically. All right. But if you know you just want to feel like you have an idea that the price is going to keep going deep down, then I advise that you stay close. All right, watch your charts once in a while. Don't go so far away from it. So I hope I've been able to make an impartation tonight. If you have questions, let me attend to it before we close. Or we have 6 more minutes now.
Sorry. Good evening.
Yeah, good evening.
Good morning. Another thing, I want to ask. I see this on a 1 minute time frame. What's the best minimum time frame to analyze the market and also take trades?
There's no best time frame for entry or analysis. It all depends on you and what kind of a trader that you are. All right. There are a lot of people.
Okay.
There are a lot of people who love to take trades from 1 hour time frame. Some take from 5 minute time frame, 15 minute, whatever time frame. The fact is, you always want to make sure that your analysis is on a higher time frame and your entry is on a lower time frame. If you are a day traders are those who trade between the 1 minute time frame to the 4 hour time frame. So if you're a day trader, you want to analyze your market right from your daily time frame to your 4 hour to your 1 hour. Maybe you make your confirmations around 15 minute or 5 minute and take your entry from 1 minute. All right. Or you can decide that if you want to take your entry from 5 minutes, then you want to analyze from daily, 4 hour, 1 hour, make your confirmations around 15 minute or 30 minutes, then look for your entry point at 5 minute time frame. So whichever way, it all depends on you as a trader, what you want to do, where you want to take your trade. That's just it. So there's no special time frame for entry or analysis.
Okay.
Very
No
well.
problem.
All right. Any other question, traders? We have 4 minutes to go. Any other question?
Hello, Mr. Tim. Good evening.
Yeah, good evening, Meg.
Yes, Mr. Tim, I'm having difficulty downloading binary on my or derive.com on my phone. I've not been able to set up Boom and Crash. Do you happen to know how that can be done on an iPhone?
Have you downloaded your MT5?
Yes, I've done that.
Have you created an account on your derivative platform?
Yes, actually, I did that some time ago.
So
But
do you have your PIN? Do you have your ID, your boom and crash
no, I
ID,
think I
synthetic
lost
ID?
that.
So you need to
I
go
think
back
I
to your,
lost that. So
you need to go back to
right.
you need to go back to your deriv.com account. All right. Go straight under your synthetic, the place area where you have synthetic, financial, and some other thing there. That's where you want to go and find out your ID. Okay, your ID is gonna have like about 5 or 6 digit or 7 digit or so. Then there's a password that you must have created. If you haven't created one, then you can create one there. That's where you can find boom and crash. So boom and crash is under the synthetic, while currency pairs is under financial. I hope you understand that now. Any other question? We have 3 minutes to go.
Yeah,
Sir.
Mr. Tim.
Yeah, Camillus.
Sir, sorry, I want to draw us back. Your last lesson you talked about 1 o'clock, 2 o'clock, trend lining.
Yeah.
Yes. Like this particular one you're working on now, what exactly are we looking at? 2 o'clock or 1 o'clock? This one. Okay.
12, 1, 2, 3, 4, 5, 6. What time? What do you think about this? Talk to me, traders. What do you think about this? Is this a 1 o'clock or a 2?
It's in the uptrend.
Yeah, I know it's an uptrend. I want to know what's direction, like is it a strong one or a weak one? Is it a 1 o'clock direction?
It's a strong one.
It's a strong one. It's on 2 o'clock, sir.
All right, I told you guys that. I told you
It's
guys
the
this.
weak one, sir.
I
It's the
told
weak
you,
one, sir.
yeah, it's a weak one because I told you guys that
Weak one.
if it's a 1 o'clock direction, then it's a
Oh.
strong uptrend. If it's a 2 o'clock direction,
sir.
it's weak. Though it's an uptrend, but it's weak. Okay. Now I'll show